Well, happy Friday. Jared Hamilton with the Hamilton Group at Cherry Creek Mortgage, and welcome to another edition of Java with Jared. Well, it is Kentucky Derby weekend, and you're going to hear that famous bugle call, and also the announcer will say after the bell goes off, and they're off, and the horses will take off. And the reality is that the employment data was released today, and those numbers were way off expectations. And it had some pretty significant effects on interest rates, and I'll get to what the actual jobs data said. But interest rates, because of today and the jobs data, are a little bit worse than where they ended last week. Nothing major, but they are a little bit worse. Well, it was a big week in terms of economic data. We saw a lot of information introduced into the market, and let me get to it right now. PCE came out on Monday, and that's the personal consumption's expenditures, and that is the Fed's favorite gauge of inflation. It showed a monthly increase of only 0.1%, and the year-over-year number was only 1.1 versus last month's 1.3. So that shows that there's basically no inflation, and that is good for interest rates over the bigger picture. We also saw some pretty big news in the housing market. Case-Shiller came out with their 20-city index, or with their index, and it showed that housing prices increased by 9.3%, and that's the biggest increase in over 7 years, so pretty huge jump there. Also, the 20-city index showed that all 20 cities for the second month in a row showed an increase to prices. So that was pretty good for housing. CoreLogic also came out with their foreclosure numbers, and it showed a 16% drop year-over-year numbers, March of 2012 versus March of this year, which was a big drop. It also shows that from the peak foreclosure rate of February 2012, we're down about 52%. So it showed foreclosure rates really declining, and actually 87 of the top 100 metropolitan areas all showed declines in foreclosure rates. So again, good news for housing. We know that's happening out there. We also saw the Fed had their policy meeting this week. They met Tuesday and Wednesday. Wednesday they came out with their announcement, and there was no change to either the Fed funds or the discount rate, which was as expected. Everybody was wanting to see if there's going to be any indications on whether we're going to see any increase to, or decrease actually, to QE3 spending. And there doesn't seem to be an end in sight. The Fed did say that there are some positive parts of the economy, did show that activity is expanding. However, the risks are weighted towards the downside. So there's greater downward risk, and that indicates that the Fed's not thinking about doing anything with curbing QE3 right now. Okay, today we saw the jobs report come out, and that was a shocker. Again, the numbers were way off. It showed that there was about 165,000 jobs added to the economy. Expectations were only for about 155,000. So big increase there, or a bit of a shock. Also, there was some higher number revisions there from the previous months. About 100,000 extra jobs were added, revised higher than the previous month. So that caused the unemployment rate to go from 7.6 down to 7.5. Again, remember, the Fed's target for stopping QE3 is 6.5, so we're getting closer to that number. But the overall, the labor force participation rate, which is that number that shows how many people who are eligible to work are actually working, that is still at the lowest level in over 35 years, or in 35 years. It's at 63.3%. So only 63.3% of the people who are eligible to work are actually working. So that didn't really increase at all. So, how strong are these jobs numbers? Who knows? But it was stronger than expected, and that caused interest rates to get hammered today, and causing interest rates to finish the week worse than where they ended last week. I also think that this probably means that it will probably put some pressure on interest rates into next week. We do not have a lot of economic data being released there, so we might see rates continue to feel some pressure into next week. I don't think it's huge, don't think it's major, don't think it's a major trend, but probably a little bit worse next week as well. So, hope you guys are doing great. Hope you have a wonderful weekend and enjoy the Kentucky Derby. And instead of having maybe Java, might have a mint julep or something. So if you ever have any questions, please give me a call. Have a wonderful week, and we'll talk to you soon. Bye-bye.